Tesla shareholders may be feeling more electrified after the company's 5-for-1 stock split took effect at today's opening bell. Shares of the electric car maker up 6%. Joining us now to discuss Tesla and a possible TikTok deal is Dan Ives, Managing Director at Wedbush Securities. Dan, always good to speak with you. About 87 questions to ask you here. But let me start off with, you're out with a note this morning. You adjusted your price target to affect the stock split. How will you know when it's time to downgrade the stock?
Sure. It's a great question. And I think it really comes down to deliveries and especially China. Right now, everything we're seeing, it continues to be a tick up in terms of overall demand and the overall opportunity. And look, this is the drum roll into Battery Day. I think Battery Day is going to be a massive catalyst with the million-mile battery and further, showing where they are relative to other competitors. That's the key in terms of this Tesla story. And right now, I still think it's a green light.
Well, who is driving the latest rally, Dan? Are institutions coming in to the Tesla story, or is this purely speculative trading by people on Robinhood?
Yeah, I think there's a misperception a bit on the retail versus institutional. I can tell you, I've talked to more institutional investors in the last 6 months on Tesla than the last 6 years, because the story's changed fundamentally, profitability-wise, as well as even more generalist PMs. You need to start to focus on the EV market. And even from a valuation perspective, especially on the indexing with the S&P, it's changed the game a bit. Of course, there's a retail momentum, no doubt. But I do think there's a little bit of a misperception that it's all retail. I believe there's a strong institutional because there's a change in the fundamental story of Tesla.
Annie Ness here. What about in China? There's so much competition for Tesla. So we saw that XPeng went public last week. Its share price soared 40% on its first day of trading. We're seeing NIO, that stock is up more than 350% year to date. And NIO announced a subscription for its battery pack, basically lowering the price of its vehicles, and also announced that it perhaps may be expanding into Europe. So what do you see for Tesla when it comes to these competitors like NIO, for example?
Yeah, NIO, a phenomenal company, and everything that's happening in China, as well as obviously a lot more innovative companies even on the horizon, comes down to it's 4% penetrated today in terms of the EV market. The EV market in China could be 5 to 7x what it is in the US. And you're just starting to see tip of the iceberg there. And for Tesla, it comes down to Giga. Giga continues to be Giga 3 in terms of what they've built. That's the moat. And ultimately for them, it just starts with Giga. And obviously what they're seeing from a demand perspective is you're really selling like hotcakes in terms of everything we see in China, despite the skeptics saying otherwise.
Dan, you say institutions are getting involved in Tesla. Is one way to think about it that institutions are betting that the gas engine in cars really goes away in 10 years?
Well, I don't think it goes away. I think they're betting that share is 10% versus 3% today. Because if that is, and you miss the Tesla story, especially from an indexing perspective, you're trying to figure out what font to use in the resume. So I think it really comes down to, Brian, is that the profitability story at Tesla and what we've seen with demand, it's changed the paradigm. And what Musk has been able to accomplish in Fremont is really a game changer. Now, of course, they have to continue to execute. Stocks had a huge move. Any speed bump, stock will get hit significantly. But that's the difference. That's why institutionally speaking, especially on the profitability side, why there's really been a paradigm change over at Tesla.
Hey, Dan, it's Dan Howley. I want to kind of switch over to Apple and ask where you think the stock is going with the new split rate. And I guess, do you see the next iPhone cycle really having to power the stock going forward? And what happens if we don't see a super cycle this time around?
Yeah, look, Dan knows, I think Apple as well as anyone. I think great questions because it's a super cycle. That's, in my opinion, it's a once in a decade opportunity in terms of what we see 350 million of 950 million iPhones worldwide are in window of an upgrade opportunity. And that's the key here. Now, of course, the services getting re-rated. I mean, if I look back like 6 to 9 months, services business may be getting assigned by the street evaluation $200-300 billion. I think that's worth $900 to $950 billion. And that's why ultimately I think Apple as a name, it's not just re-rating, but you're going into a super cycle. And I think you're starting to see that combination happen, which ultimately I think is really going to be the next leg to the story.
Dan, is there, Apple, it has been re-rated. Do you think the market is positioning for an unnamed product or an unclear product coming from Apple over the next 12 to 18 months? We know the iPhones, we know the AirPods, we know the Mac. Is there something they could come out that can really change the game in another category?
Well, and I don't think it's being necessarily priced in, but when you look at the AR headset and some of the other things that they're working on, those could be the next pieces. Because it all comes down to when AirPods came out, it was kind of viewed as a shrug of the shoulders from an investor perspective. That's a $30 billion revenue stream. So now services is 60 billion. So that's 100 billion incremental just from those two areas. And I think AR is probably the one area that there's a focus on. I think the other focus is that services business on the video streaming side. Do they eventually rip the Band-Aid off and buy a studio from a content perspective? Because that's the missing piece. Remember, they built a castle, a mansion, but there's not too much furniture in there with 9 or 10 shows.
And Dan, I just want to touch on real quick TikTok and where you see this whole conversation with the company going, and who may end up scooping it up, and what it could mean if it does go to Microsoft. I mean, do you think that it would be a benefit to them in the long term, and do you think they understand how to fully run a teen-oriented social network? We've seen their success on LinkedIn, but this would be a different kind of animal, really.
Yeah, and look, I still think 90% chance it's Microsoft, Walmart. Now, obviously, a wrench thrown into it with China getting involved in the new export, but I believe that slows down, doesn't necessarily derail. I think Microsoft, Walmart, 35 billion continues to be the area code. A deal gets done. For Microsoft, I think it will be a part of a re-rating. I mean, as much as Nadella's had the golden touch on enterprise and the cloud strategy, consumers really been on a treadmill for the last decade. This would give them a major horse in the race. Of course, it makes a lot of sense for Walmart, given the e-commerce capabilities. And this is going to have other chapters to the soap opera, given the complexity of the deal negotiations. But I think at the end of the day, in the coming days and a week, we're sitting here with a Microsoft TikTok deal rather than Oracle, which to me is still more of a head scratcher and a long shot.
Dan, how would this deal get structured if you're Walmart, Microsoft? I'm looking at through the Walmart prism. How would they benefit? How would they make money?
Well, for Walmart, it's similar to what TikTok's done in China with their app there. Almost QVC-like in terms of the cross-pollination from an e-commerce perspective. This would really give them something to go against Amazon in terms of, all the consumers as well as the cross e-commerce platform. That's why for Walmart, for them to hop into this negotiation, I think it was a no-brainer. And I think they're looking at how it's been used in China in terms of the opportunity. Now, in terms of the structure, is it a 90-10 and 85-15? What type of JV-ish type structure? But ultimately, I think Walmart getting involved really cemented the deal from a Microsoft perspective.
Dan, let's say this deal does get through. Walmart gets its piece. Microsoft gets its piece. What is the next evolution of TikTok? What doesn't it do now that these companies could make it do?
Well, I think it's going to be more about the monetization of it rather than touching, anything that's really been a golden jewel. And it goes back to, in Redmond, I have a lot of confidence in terms of Redmond doing a good job containing TikTok and taking it to the next level. I think it's going to be more cross-pollination, more content-driven. I think that's something you're going to see. And really for them, it's monetizing it. I mean, it goes back to Instagram, pre-Facebook and post-Facebook. And I think on a broader platform with more distribution and the Microsoft brand, there's a lot of different avenues they could take this. And that's why Nadella and from Microsoft, I mean, it's really viewed as Christmas came early in terms of this asset.